Hi, everyone. Welcome to Be Different for Success. Today, we'll be talking about why you should invest in real estate. The benefits of investing in real estate are numerous. With well-chosen assets, investors can enjoy predictable cash flow, excellent returns, tax advantages, and diversification. And it's possible to leverage real estate to build wealth. Thinking about investing in real estate? Here's what you need to know about real estate benefits and why real estate is considered a good investment. Before you do a deep dive into the benefits of investing in real estate, I invite you to subscribe to our channel and watch our playlist regarding investing in real estate. Here we go. Number 1. Real estate has a high tangible asset value. Tangible assets are physical things like property, computers, and equipment that are worth money. Real estate especially will always have some kind of monetary value. Number 2. Real estate appreciates in value. Real estate tends to appreciate in value over time. Not only will the building or home itself likely grow in value, but the actual land that it's built on will also usually be worth more over the years. In some markets, it's not uncommon for the land to be worth more than the house that stands on it, or for the land value to continue to rise even without a house on it. Number 3. The opportunity to maximize value is in your hands. One of the best things about real estate is that you can improve a property if you want. Add amenities like a pool or improve it with an updated kitchen or bath. You can either rent it out or sell it for more than you paid for it. Since real estate is a tangible asset, any improvements you make to it will increase its value. Some things that bring the biggest return for your money are garage door replacements, kitchen remodels, and deck additions. Number 4. You build equity in your real estate investments. If you invest in actual houses, your equity in the home should increase the longer you own it. Equity is the portion of the home you own outright, as opposed to the part a bank may own if you have some kind of loan or financing. As you pay off your loan, you generally build more equity in a property. Also, as the value of the property appreciates through the years, the house becomes worth more, adding to your equity. Number 5. You can leverage that equity. One great option with real estate investments is that you can take out a home equity loan. This can be set up either as a line of credit or as a traditional loan. People use home equity loans to pay for college for their kids, home renovations, to buy rental property, or even sometimes to pay off other high-interest debt. Number 6. Real estate is a way to diversify your portfolio. This is another way to lower some of your risk, especially if you're investing lots of dollars in other opportunities. Most experts recommend diversifying your portfolio so you won't lose everything in one fell swoop if the market where you've most heavily invested happens to go south. Real estate is an excellent place to park some of your money, a place much safer than many other investments. Number 7. You can predict the cash flow of real estate investments. Most investments don't allow you to predict the kind of cash flow you'll receive. With real estate, on the other hand, if you know what a property is renting for and that you have a tenant, you'll know what your cash flow will be. As long as you keep the property occupied, you can count on that money every month. Remember, though, to budget for routine maintenance and repairs, and factor that into your yearly expenses. If you don't want to deal with finding and managing tenants yourself, you can hire a management company or a property manager to do it for you. Number 8. You can establish a passive income source. Because you can predict cash flow, you can also figure out ways to maximize revenue or cut expenses in order to establish a passive income source that will last as long as you own the property. Set the rent for your property at an appropriate price and raise it responsibly to cover inflation. Try and always perform preventative maintenance so catastrophes and emergencies don't sneak up on you. Also, make sure you have the right insurance. Number 9. You can take advantage of inflation hedging. Although inflation affects every investment, real estate is an investment that is almost always in demand, so it typically maintains its monetary power. Normal inflation often makes it more expensive for companies to create products and services. They either have to raise their prices or accept lower profits. Real estate doesn't have a strong correlation with stocks or corporate profitability. so it is a natural inflation hedge. You can also often pass any inflation costs along to tenants. Number 10. You get tax benefits with real estate that you don't see elsewhere. If you own your own house, you can deduct mortgage interest. State and local property taxes are also usually deductible. For investment properties, you can often deduct operating expenses and costs, insurance, property taxes, and maintenance. Capital gain taxes are 15 to 20%, typically lower than your personal tax bracket, which can be a huge advantage over other types of investments. If you use the money from a sale of one property to buy another property, you can defer your capital gains. This means you aren't taxed at all on that money because it went directly towards the purchase of another property. Number 11. It's a good way to save for retirement. A 30-year fixed loan allows you to build equity in your own home over a long period of time. If you decide to downsize when you've paid off your loan, it's likely you can get a smaller house and have a nice chunk of change left for retirement. Number 12. You can use rental income to pay down your mortgage. Rental income is an excellent way to pay down your mortgage. Renting out a room in your house to a roommate, or even your entire house on Airbnb on weekends, can provide you some extra cash that you can then put toward your mortgage. Profits from investment rental properties can help you pay down your mortgage sooner, or save for a down payment if you don't own a home of your own yet. Rental income is also a great source of passive income to add to your retirement plan. You'll have money coming in even after you retire from your job. Number 13. You have tons of options. There are all sorts of ways to invest in real estate. Buying your own house counts. You can buy a fixer-upper, renovate it, and flip it. You can rent out a home, offer a lease option agreement, or invest in a REIT or a crowdfunding app. Whatever your level of commitment, you can probably find a way to invest in real estate. If you want more information regarding all the different options, you can check our playlist, Real Estate Investing. Number 14. Investing in real estate is good for communities. You're helping local economies and providing homes for people. By investing in affordable housing, maintaining it well, and adding upgrades, you can help provide nice homes for people to live in, some of them unable to afford even a small down payment on a house of their own. If you're in a position to buy one or two abandoned or unkempt homes and fix them up, you'd be helping the community. Number 15. Real estate doesn't have to tie up a lot of cash. In many instances, you can put down as little as 10% on a property, then essentially use the bank's money to grow your investment. Lending is becoming more viable and friendly to buyers. Number 16. Real estate investing could help you eventually afford your dream house. If you aren't able to afford the exact house you want, you could consider buying something more affordable and living in it for a few years to build some equity. After that, you can start investing in some rental property, building your portfolio and net worth until you're able to afford the house of your dreams. Thanks for watching this video. I hope you liked it. Please click the thumbs up and write your personal tips in the comments below. Thank you for your support, and don't forget to subscribe to the channel if you want to hear more from us. See you in the next video.